Hey, and welcome in. This is Arnold Engel, and you're on the Good Call Show. Today, we're going deep on Robinhood, and we're asking private jets or tokens. Where should Robinhood really be focusing? So, today, we're going to go through a major strategic decision that Robinhood's going to be making and where they're really going to be focusing their energy and effort. We're going to go through and look at how one of the leading AI decision making models takes a look at this, and we're going to talk through it. I'm also going to give my take and dive into the details here so you can get up to speed on Robinhood and where exactly it's going. So the first thing that we always want to take a look at here is, what's the key question? Should they double down on some of the things that are really working well for Robinhood and it's been on a tear recently? Or should they enter a new market and try to expand the pie and what they're doing there? So that's what we're going to be taking a look at today. And let's talk about the stakes here. So it's a big decision moment for Robinhood that seems like there's a lot of changes happening, both from a regulatory perspective in their area and also with changes in competition. They've had a lot of success. Their stock price has been up considerably, and they now are at this kind of strategic crossroads of spending more time, energy, and effort on the things that are working. And that really is kind of the core aspect of their trading, whether that's stocks, options, or crypto, or to kind of expand into new markets, like, for example, private banking, which the CEO has mentioned, or tokenization. And we'll get into both of those in more detail today. The reason the stakes are so high is, it's a moment where if Robinhood can actually get this right, they transform themselves into more of kind of the operating system of the financial world, particularly for millennials and perhaps Gen Z, and can really take themselves to kind of a next level with becoming more deeply embedded with that key demographic. As millennials age, they become wealthier, and they can really grow and harness that. That's kind of the moment if they can capture it. And the downsides are potentially getting distracted, potentially missing opportunities here, and starting to fade in terms of relevance as others kind of pick up with that. And given the valuation and where Robinhood is now, this is a high stakes moment for them. They've either got the opportunity to kind of catapult themselves into something that will persist in a big legacy way, or they might kind of hang around and, in the words of millennials and Gen Z, maybe just eventually kind of fade into being washed at some point. And so that's the moment for it. And when we really look at the stakes, they're pretty high at this point, and awesome that Robinhood's been able to get themselves into a position where they have these types of stakes and it matters so much, but there's a lot on the line here. So let's dive into some of the context for this. Now, if you're just joining us, we put all of this information and context into the Herringbone AI, which is focused just on decision making. And we see what sorts of questions Herringbone comes back with in terms of how to evaluate this decision, how to walk through it. And I'll give it some of my take as well. And then we'll get to the bottom line of what the AI thinks Robinhood should do here. So some of the background, Robinhood's the leading US-based trading platform, covers stocks, ETFs, also covers crypto, very popular kind of with the millennial and Gen Z set, kind of building off of maybe what Charles Schwab did for an earlier generation. They've had earnings expectation beat recently. They've had 45% year-over-year revenue growth. Thank you, Perplexity, for making some of the financial research really easy. A couple of the analysts that follow the stock have recently upgraded its price, so it has a very high outlook. They've also got things like introducing fractional shares, so the idea that you can buy a part of a share of Tesla, let's say, rather than the entirety of it. They've got margin trading on it as well, and some securities lending for it. Over 25 million users. They've done more of an international expansion recently, so they have some offerings, I believe, just in the UK, and certain offerings that are only available today in Europe. They've had some regulatory issues in the past, and it seems like kind of a staccato of different issues that have come up over time with it. And primarily, I think the revenue comes from order flow and margin activities, and some of those could be impacted by regulation. Order flow, of course, is basically essentially kind of getting out ahead of the trade of your customer and selling that on to hedge funds. There's a lot of value in that sort of data, and Robinhood has been able to monetize that while not having to charge their end customer, their user of Robinhood, a explicit commission there. So that's just some of the context, and let's start with some of the big questions that come in that have swayed the AI in its decision making. So there's two that it really came up with here as it looks to think through this problem. The first is, whether Robinhood has any concrete evidence that more than 20% of its 24 million or 25 million users actively use and generate revenue from 5 or more of their different lines of business. Again, they have roughly 9 different lines of businesses where they're getting revenue. Why this matters, so the AI is basically picking up, this is kind of your way to first test. There's some fundamental assumption underlying Robinhood of, are there these synergies across this ecosystem, and are they able to kind of cross-sell effectively? So are they able to take the person that's coming in and trading ETFs, let's say, on Robinhood, and move them also to buy and sell crypto, or move them into margin trading or options trading, for example? And so I think that's really what the AI is getting at here, is like, how much are these kind of 9 distinct lines of business versus that actually the kind of Robinhood customer comes in and almost shops at a the Robinhood supermarket, if you will, where they're purchasing kind of across a range of different items as their needs evolve, or they're kind of interested in different aspects as they, perhaps gain more wealth, or looking to take on more or less risk with that. So overall, the AI thinks, look, if it's yes, and you are getting this kind of cross selling, that really does strengthen the case for selective product expansion, as it seems like there's an appetite there. If not, it's much more negative on it. You probably want to figure out why you're not getting that sort of pollination and cross-pollination across it before you continue your expansion with it. Second big question they ask is, could Robinhood achieve its next $1 billion in revenue growth faster by enhancing its top 3 revenue lines? So it's picking out crypto, equities, options, let's say, than by launching a new product line. So can you go faster to just tack on that extra $1 billion of revenue, which it views as, still for Robinhood scale would still be pretty substantive here. And it's really just testing, okay, what is the ROI assumption of the kind of optimizing what you've got versus expansion strategies with it. If you can get that $1 billion of revenue just by focusing on where you are, it really decisively tilts it towards just optimizing and going deeper on that in the eyes of the AI here. So interesting, like, it's just pulling out different patterns from what it's seen across a whole range of other business examples, and as well going through some of these bigger mental models to kind of think about that. And we'll go into a little bit more depth on 2 specific mental models that the AI is picking on when we get to the model section in a little bit. So let's go into some of just the bigger points that we're getting from the AI back here. So what are some of the key decision points? It's basically highlighting, a really substantive portion of their revenue comes from crypto, equities, and options. Looking that up on Perplexity now just to see if we can get a little bit more detail. So Perplexity is basically saying, of their recent revenue, roughly, more than half of it is coming from options trading, cryptocurrency, and equities trading. It looks like around 70% or so. And the remainder, the bulk of that, is kind of attributable to what it calls net interest revenue, which breaks out into essentially margin loans is one component of it, securities lending, is another big component of it. And I think the rest drops into things like cash and securities deposits, sweeps, interest, kind of, relatively low risk and high um, and profitable aspects of just holding all of that cash for customers. So that's kind of what's coming in there. So that's kind of where it's picking up on the power law kind of distribution, and most of the stuff is coming from these few areas in it, and so it views that as maybe more likely to see where more of the growth is going to be generated from in the future as well. The other aspect that it highlights here is, there might be kind of regulatory challenges in crypto. It's obviously familiar with that based off of some of the stuff that it's ingested in its training data. Options trading could amplify some of those risks, including maybe some systemic risk. And it thinks overall that the existing portfolio could contain pretty substantial untapped value, offering kind of the same sort of thing as a new product launch growth, but within the existing portfolio. So that's just some of the perception right off the bat here that I think is pretty interesting. Just in terms of some of the risks and other aspects the AI is flagging. So it sees there being kind of a complexity cascade is what it's calling it. So that the business could become more difficult to operate or more complex overall with this sort of expansion and moving into different areas and actually attract kind of more of a regulatory scrutiny. The other aspect, which is interesting, is kind of what it calls psychological biases here. So just the idea that for a company that has had a lot of success and being able to build an unbelievably powerful business, from a really early stage, and Vlad as the leader and CEO has been there since the beginning with it. Obviously, they've had a lot of success, and I think in general, the AI will typically look at the psychology of, okay, if you've had a lot of success, what could be one of the downfalls to that? Maybe the psychological bias of kind of thinking that you will have that continue even as you kind of expand outside of your area of core competence and outside of kind of what you've been able to do really, really well. So we're going to transition to that next topic, which is the models. So we like to look at a few of the mental models. Charlie Munger made this very popular, and we're actually going to pick a couple, given that this financial services business, we're going to pick a couple mental models from Charlie Munger and go a little bit deeper into what they would mean as they really pertain to this question. And the first one really is that circle of competence. So Munger and others have always really focused on wanting to grow within your circle of competence. That is where you have had success before. That's where you really have an advantage. Know what that is and try to make sure that you're really building kind of within that area. Typically where people run into issues is when they drift outside of it, and that kind of distracts mainly from the main thing, which you want to keep the main thing. But it also, there's sometimes issues where outside of your circle of competence, you don't know what you don't know, and can oftentimes make costly mistakes there. So I think looking at Robinhood from a very high level, you could see that circle of competence really being around the ins and outs of trading, right? So if you're going to tell me, that there's a product that's really related to equities trading or options trading or even crypto trading, that to me still feels very much within the circle of competence for Robinhood overall, and they should be in a great position to capitalize on opportunities that sit within that space. And I've heard Vlad, their CEO, talk about kind of two different potential expansions of their product lines. And again, they've got these 9 different revenue streams across the business and this financial supermarket aspect of it. And one of them is expanding into private banking. So they have their Robinhood Gold, subscription, which is $5 a month. It comes with some additional features. Vlad's talking about kind of extending that, and even had a funny metaphor, but I think actually not a metaphor. I think he was really being serious about trucks filled with cash showing up at your house and making cash deliveries to you as part of their private banking service, as opposed to needing to go to an ATM, let's say. Up to everyone's imagination whether that would really mean like Robinhood branded Brinks type trucks that are armored and otherwise, like driving around neighborhoods dropping off suitcases of cash at people's houses. I'm not entirely sure that's where that goes, but anyway, thinking about that as like, hey, we could get into the private banking market and really make sure that as millennials had more and more wealth, that we were capturing that kind of top echelon of customer and moving in that direction. And it appears as though Robinhood is planning towards a launch of that type of product in the fall of 2025. So that's one aspect that they're looking at, is like, okay, how do we move into that space where competitors in my mind would probably be Morgan Stanley, Goldman Sachs, JP Morgan. You've got a different set of competition in that space. And then the other aspect that has come up and that Robinhood is clearly working against is tokens and tokenization. So the concept here being at a very high level, whether you can issue a token that essentially kind of creates a synthetic ownership of a private company. And that's really kind of the use case that we were talking about early on, and looking to roll this out first in Europe, where I think the regulatory environment is more friendly to this, but as quickly as possible, I think, to get into the US market with this. So the idea being that a trader on Robinhood, could come in and buy a token for OpenAI or for SpaceX or any Anthropic, any private company which is big, which people are interested in, they're really kind of following. You could go in and own that through this kind of tokenization scheme. And I, without knowing all the details to it, I'd presume that there's certain aspects that are essentially like derivatives and swaps that they're kind of putting on underneath it, perhaps through some sort of SPV that they have. But it's pretty clear the buyer of such a token is not an actual owner of a share in that company, but rather they're speculating on the price movements of shares of that company. And it's done in a way to kind of mimic what that would be. That basically, if OpenAI starts being valued at a much higher level, that someone who had bought such a token would presumably, make that a corresponding amount of money off of that. So that's kind of those are two of the bigger opportunities they have to kind of move forward and enter into a new line of business, and that's really where they're considering. So to put this back to Mungler's concept of circle of competence, I really see it pretty clearly here as when you look at those two aspects. I think the tokenization concept fits much better within that circle of competence. It's trading. It's the idea that you can get access to things in a way that's pretty interesting. It just my take on that as well is that there is a part of this that fits maybe better with the Robinhood brand, right? This kind of concept of democratizing finance and democratizing access to the financial markets. And there's something probably pretty satisfying for a Robinhood user and customer to feel like, okay, well, SpaceX is a private company. There's no way for me to own that, or OpenAI or Anthropic. These are the big names that are generating tons of returns for private investors. I want to get into that. And if Robinhood is seen as the one that's delivering that and allowing people to get into something like that they previously wouldn't have been able to, that can be a powerful message. And that can be kind of a powerful aspect of building out their democratizing finance brand and building off of that. So I think that's what's interesting to see. And if we look at the mental model for circle of competence, it would kind of say, well, one of those is the tokenization. I think is more clearly kind of within that that framework, and so pretty helpful to see that come together. The other aspect that I think would be would be helpful in some sense is really looking at the mental model for what's called a Lollapalooza, which in the summer, that's also a big concert in the Chicago area, so it's kind of fun to always look at that in the summer. But it's essentially this aspect that different forces could kind of compound and could either be a real positive for the business or actually compound and destroy value for it. So it's the idea that when you put a lot of different things together in some sort of a Lollapalooza type effect, that could either be a real negative or it could be a real positive. So in general, I think looking at this, especially when I look at kind of tokenization versus private banking, the tokenization part probably actually does have some potential for a Lollapalooza effect, given the idea of opening up something that has not really been possible, that does feel like it could be enhancing or additive towards, let's say, options trading or trading ETFs, or kind of the core aspects that are really helpful for Robinhood customers. You could see a story where there is this type of Lollapalooza effect where Robinhood becomes not just like the place to trade meme stocks. Obviously that's reductionist, but for maybe a lot of the general public, that might be in kind of their mind, but instead also kind of morphs into this interesting access story for it, where it becomes the most reputable place, let's say, or otherwise, to be able to get a stake of OpenAI or SpaceX or Anthropic, or even I think we see with the Figma IPO, there's an imagination, let's say, on some of these later stage private companies that have not gone public, what those could be, let's say like a Stripe, for example, or even within the design space, Canva. These companies are highly valued, and a lot of the returns have gone to private investors, to venture capitalists. And I think the general public, there could be an interesting catalyzing effect for Robinhood to feel like they're bringing more of that stuff in. So I think that's how I would look at it from a mental model perspective. Those are two, to look at with it, that I think could be pretty interesting here with it. So yeah, I think overall we're going to move into the decision and what is it that the AI thinks Robinhood should do here, and then I'll give a little bit of my perspective on it and some of my takes. So overall, the AI is generally pretty cautious about strategic expansion for this. I think it tends to see more of the negatives than the positives here. It thinks Robinhood should just pursue a minimal strategic expansion, only on one, max two high confidence opportunities that really leverage some of their existing strengths in crypto and trading technology. The fact that the company does have a pretty strong diversification has created a pretty stable platform, and it thinks that that's the reason it really should focus more on optimization than on expansion over here. It sees the biggest risk here as not on the missing of new opportunities, but just overextending, straining operations, and maybe inviting, regulatory scrutiny, let's say, with that. So interesting to see how that really comes together, where Robinhood is in the eyes of the AI, on a very good path, let's say, in having built up and built its revenue so quickly with it. But it views it as there being a bit of a perilous moment of, you could go down the path of overextending with it and potentially having, some difficulties either operationally or, quite frankly, I think pushing the envelope perhaps too much with the SEC on a topic like tokenization, where they come down and regulate it obviously as a security in a way that becomes very difficult for Robinhood to operate. It's possible that that pathway is obviously more risky there. So I think my take overall on it is there's a couple different elements I want to go through. I think the AI, I think in terms of direction, is really savvy here in it. I think it just kind of making sure that there's enough sort of caution on the kind of blanket. Hey, we're doing really well, so like let's roll out 5 new products as quickly as we can, and just more is more kind of mentality. I think overall there some of the things that were very successful for fintech companies to get to this point might not be exactly what will continue to to build success for them. And I do think that thinking about how Robinhood goes from, let's say, 24 or 25 million users today, how they create a lot more activity within that base, as well as grow that to a much bigger number as well. I would tend to focus more on expansion within things that really feel within their circle of competence. So I would look at, for example, the event trading work that they've done, and I know they've partnered with Kalshi on some of that. So whether it's who's going to win the Masters and sports betting, essentially, or looking ahead towards, let's say, the political midterms, coming up in the United States, and eventually the next presidential election, betting on those types of outcomes, bigger things like that. How could they bring more of that attention into the fold at Robinhood that feels very much kind of like within their ethos, and getting more people to spend more time in their app, thinking critically about what's happening in the world and how they can make money off of it. All of that feels very much within kind of that circle of competence. And as much as anything, it feels like some of this next phase from the financial services front is about attention, right? It's how much time, I imagine the folks at Robinhood do spend time thinking about, okay, how much time do our customers spend in the app, right? And what are they doing there? It's not just how much money are they investing and how many trades are they doing. There is kind of an attention aspect to this, which I think is interesting, and maybe a different way than, let's say, like previous generation, like a Charles Schwab would have thought about this. So I think really thinking about that attention and what could drive that on the product is pretty important here. And so when I would weigh up the, do we go for private banking and Brinks trucks delivering cash to people and private jets, and like, do we want to kind of lean into maybe some of that type of influencer marketing that could have some interesting stories, let's say, for Robinhood? That to me feels more like a marketing, aspect to it, rather than like a deeper strategic decision. So I think something that will, you'd want to kind of consider in that. And I'm not saying that there's not value from a marketing perspective there, but that could be done with a lot less organizational focus than actually needing to roll out the product. And thinking a little bit about the competition in both of these areas, I think is pretty important as well. Private banking, you're, as I mentioned before, Goldman, Morgan Stanley, you're competing with people that are going to move a lot slower, but who have existing really powerful franchises and brands built up there. And my sense would be that opportunity is probably practically the same a year from now, or 2 years from now, maybe even 5 years from now, as it is today. It's not particularly fast-moving territory at this point. And so it's probably best that once you've tacked on an extra $1 billion or $2 billion in annual revenue, you're going to be in a better position to tackle that and take on some of those heavyweight franchises at that point, rather than taking it on earlier at this point. So my sense would be wait on that, focus in the circle of competence. And in that circle of competence, I think that you do have some competitive threats and risks, and you might want to be thinking about moving as strongly as you can there to make sure you're successful, right? If you think about who could offer a token product that allows individuals in the US to buy and sell shares of OpenAI or Stripe or SpaceX, there are more names that come up in that category that I think people would immediately think to and say, yeah, they have a platform for that. They have a consumer audience that would be interested, and they have kind of the space where they'd have the credibility to do that. I think off the top of my head, I mean, you have Coinbase, obviously, You would have a Poly Market, you would have a Kelshi. I think any of those could kind of play in that territory with it. And so those companies can move much, much faster than, let's say, a JP Morgan or a Goldman Sachs would with it. So it feels like that moment is up for grabs with it. And if Robinhood is too late there, they might cede some real territory or lose ground off of it. And so I think that's kind of more the area to focus in with it. And I also view, some of their lines of business I think are relatively passive in it, like the cash, deposits, cash sweep, interest revenue, and that sort of stuff that they're kind of collecting. I think that's where maybe they feel the confidence of like, okay, we can execute the blocking and tackling of that and want to push forward and kind of want to push for this expansion. I think in general, it's a reasonable path to take, but I'd really kind of be, try to be focusing that in as much as possible. Well, great. This was a fun one to go through. Robinhood's always like an exciting company to dive into. I'm really excited to see what's going to happen over the next couple months with them as they look to make this sort of decision and watch how the stakes play out, right? Do they get it? Do they get it right? How are they really positioning themselves? And are they setting themselves up for a great next couple years? Or, are they going to be mid basically for a while and watch as other people go and make things happen here. So thanks so much for joining us. We're going to be back tomorrow with another great decision where we're going to take you into another boardroom to make a